Hello traders, my name is Tomasz Wiśniewski and welcome on a daily analytical report with Alpari. Well, what do we have today is strength of American dollar caused mostly by Janet Yellen from yesterday. Well, Janet Yellen was her yesterday speech, actually answers for on a press conference, was considered hawkish, right? Why it was considered hawkish? Because she said, for example, that waiting too long to remove accommodation would be unwise, potentially requiring the FOMC to eventually rise rates rapidly, which could risk disrupting financial markets and pushing the economy into recession. Right? She also said that incoming data suggests that labor market conditions continue to strengthen and inflation is moving up to 2%, consistent with the committee's expectations. She also added that at our upcoming meetings, the committee will evaluate whether employment and inflation are continuing to evolve in line with these expectations, in which case a further adjustment of the federal funds rate would likely be appropriate. So, as you can see, and now many traders are wondering if we will get probably 3 interest rates rises this year, not 2 as previously anticipated. And that is why American dollar got significantly stronger yesterday. Actually, dollar index has the best streak since I guess May 2015, right? So dollar index is advancing higher for 11th straight day, which is the longest positive streak since July 2015, as I checked. Now, also indexes are pushing higher. MSCI benchmark global equity index is on the highest level since May 2015 and only 2 points from record highs. Obviously, S&P 500 was trading higher, but that's not a surprise. Actually, normally what it happens is, and what was expected like a year ago or 2 years ago, on many books about macroeconomy, trading, etc., it is clearly said that when you rise interest rates, stocks should go lower, right? And stocks now are not going lower. Never. They are not going lower in any case, right? We have a bad news, good news, no news, we have a lot of news, and stocks are just trading higher. We had Trump as a president, stocks are higher. Rising interest rates, stocks are higher. We have now problems, we have a discussion, we have problems with Vice President in the United States, Mr. Pence, and we had a problem with advisor of Mr. Trump and his contacts with Russians. And stock traders, they do not care. They just buy. Regardless of the news that hit the wire. So that's actually a very interesting situation, because as I said at the very beginning, on almost every book about macroeconomy, when it's said about rising interest rates and the influence of this action on stocks, it is said that rising interest rates is mostly pushing stocks lower, and now we're not having this action on the table. So now we have a full risk on mode on the market, and traders are just enjoying themselves, buying and buying and buying more. And for some of traders, it's not a surprise actually, because this state is happening for the last year or even 2 years, that regardless of the news, if it's bad or good, the stocks are just pushing higher. As for the calendar, what do we have in the economic calendar? A pack of data from United States today, with CPI being the most important. As you can see, rise is expected 2.4, and previous number was 2.1. CPI excluding food and energy, we are expecting a drop, and this will be definitely the most influential news. But also we do have a retail sales. So a pack of data in hour and a half, we should expect a high volatility on the market. We should expect a high volatility on the market, so watch out for big movements. Also, we have a continuation of Janet Yellen. We had her speaking yesterday, as obviously you know, and you can spot that on the charts. But she will be speaking today as well. Well, actually, yesterday I told you that we shouldn't expect anything significant from Janet Yellen. I was wrong. I can tell you that I was wrong. She changed her tone a little bit. She was hawkish. She is perceived hawkish. Market sees that as a hawkish. I thought that she won't tell anything significant, but she did. But that's good. It created good trading opportunities on the market, and we have a few interesting setups. As you can see, till the end of the week, we still have a quite important day tomorrow, Thursday, especially from New Zealand and Australia, but also ECB monetary policy meeting accounts, pack of data from the housing market in the United States, and that would be it. On Friday, nothing from Tier 1 data, but retail sales from New Zealand and from Great Britain. So we know about fundamentals. We can now switch to the charts. So actually, what big news agencies are talking about right now is Donald Trump and problems with his advisors and contacts with Russia. And obviously we are digesting yesterday's hawkish Janet Yellen. So these are the main drivers on the market. Apart from that, not much happened. So we can check the technical situations on the situation on the chart right now. So American dollar to Swiss franc. You know that we broke out of this flag, and that was an invitation for a new bullish wave. What we are having here is an upswing, which stopped for some time at 38.2 Fibonacci level. That was actually a good idea to have a stop here, but as you can see, Janet Yellen from yesterday helped the price to break this level, and now the price is making again higher highs and higher lows. So 38.2 Fibonacci level will be now the closest support. As long as we stay above the support, the sentiment is positive, and I would even extend it here. As long as we stay above this green line, this red line, the sentiment is positive, and we are having kind of a channel up formation here. American dollar to Japanese yen, and here Janet Yellen helped a lot, as we tweeted on our Twitter account. As you can see, we are having a correction in the new year in 2017. American dollar got weaker against yen, but correction ended on 38.2 Fibonacci level, also formed a wedge. So we could expect a bullish breakout here, and actually we got a bullish breakout. As you can see, 1, 2, 3, 4, 5 bullish days in a row. Well, we will see if today we will get one as well, but it looks promising. It wasn't looking promising yesterday before Janet Yellen. As you can see, the price after the breakout, this breakout wasn't very convincing, right? The price didn't create higher highs and higher lows, but straight away after they got out from this wedge, this price started to go down. But Janet Yellen helped local bulls and created this candlestick, and now the price making higher highs and higher lows. And I would say that the first potential target for the movement is 115 points, 115.30, 40, right? So it's more or less 80 pips. But another one is this blue line connecting recent long-term lower highs. So we can see 250 pips. So altogether 340 pips. That looks like a good target for me, and like a highly probable setup. I can see the price getting there soon, in my opinion. Euro dollar. Here Janet Yellen caused the breakout of this horizontal support. Price was bouncing from this support and was testing the upper line of the flag. And you remember yesterday on a daily analytical report I told you that there are two similar setups on American dollar to Swiss franc, which is promoting an upswing, and American dollar to Japanese yen, which is promoting an upswing, and euro to American dollar, which was promoting an upswing as well, but that were movements in the opposite directions. Right here, that would mean that if the price would break the upper line of the flag, that would mean that dollar will be weaker, and here upswing meant that the dollar will be stronger. And actually what we and I told you that it's almost impossible that two opposite trades will work out at the same time. But the power of this approach was that the potential profit from one position should be much higher, twice as high as the potential loss from one trade. So in both cases, we should open like 2-to-1, 3-to-1 risk to reward ratio trade. And even if the second one would be closed on a stop loss, the second one would bring a large profit. So here we got a bearish scenario, and most probably that would end on stop loss. But hopefully you bought somewhere here with a stop loss here, and you already would have 2-to-1, right? So you would cover the loss from euro dollar and also make profit from this pair. Okay, that's one of the main principles in profitable trading, that average win should be much larger than average loss, and with that ratio you don't have to be accurate with your with the fact if you're right or wrong, right? With your efficiency, you can be wrong from time to time, but with good risk to reward ratio, you can still earn money. So the sentiment on euro dollar after breaking this horizontal support is negative, right? As long as we stay in this channel down formation, the sentiment here is definitely negative, and in my opinion we should get at least here to this support, so 40 pips lower. What will happen after that? Hard to tell from this point. Those price movements, for me, they create a nice short-term sell position, but regarding the mid-term and long-term, I'm not convinced if the price will go higher or the next instrument I have is silver. And again, silver and gold are correlated with dollar. They are quoted in dollars. So if dollars are stronger, if dollar is stronger, if American dollar is stronger, usually price of gold and price of silver goes down. But as you can see, dollar is much stronger for the last 11 days, as I said at the very beginning, the longest positive streak of 11 days in a row since July 2015. But gold and silver are also advancing higher. So we can see this real demand on gold, not driven by a cheaper or more expensive dollar. If the dollar was cheaper, probably the demand for gold and silver, the price of the gold and silver would be much higher than now, right? Would be much higher, but still they are doing very good. And from the technical point of view, how the situation on silver looks like is that we have an upswing, we have a correction in a wedge formation, then a breakout of the upper line of the wedge, and we should get to 50% Fibonacci, to 38.2 Fibonacci level, and in the longer term to 23.6. Here sentiment is positive. Most of the factors from the technical analysis are telling us that the sentiment on silver is positive. So if you believe that, you're more than welcome to open long position. On gold, you remember gold, which is respecting Fibonacci lines with a great detail, which is treating Fibonacci lines with great respect. 23.6, resistance, support, 38.2, resistance, support. We like that hammer candlestick, right? And the price was advancing higher. We had a position there. We went on break-even point and we closed that position without a loss. But we are still positive on gold. As long as we stay below 38.2 Fibonacci level and this uptrend line, the sentiment is definitely positive on gold, even despite the fact that American dollar is recently very strong. But we can see a demand on gold, and you know about that because we are telling about our bullish view on gold from the beginning of the year. And as you can see, since the beginning of the year, the price is already $70 higher, over $70 higher. This correction is absolutely normal. The price does not spike forever. It's not 2003, 2004 when the price of gold was advancing higher every day, or 2010, 11. So every upswing has own corrections, small downswings. As long as the price stays above the trend line, the positive sentiment also stays. Australian dollar to American dollar did it again, right? So I thought that this correction will be for 70 pips. No. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Right, so we got in another correction. So this one is a little bit bigger, not 70 but 77. And after making those lows, the price is advancing higher. We have this support proved to be effective, and this is no longer an important support. So what we do have here is an important resistance. If you are bull but you don't want to buy now, maybe buy stop order can convince you, or buy limit order somewhere here bouncing from this horizontal support, or maybe sell stop order if you're a bear and you believe that breaking this support can be lethal for the price of Australian dollar versus American dollar. And yes, American dollar is correlated with gold, but also Australian dollar is correlated with gold. So when Australian dollar to American dollar, well, not only to American dollar, but generally, if Australian dollar is stronger, gold is also more expensive, right? If gold is more expensive, Australian dollar is also stronger. So this it's how correlation looks like. So this can be an answer of the fact that gold is trading higher as well, and what are the perspectives. Because perspectives for Australian dollar to American dollar are very positive, so are the perspectives for gold. Canadian dollar to Japanese yen was our trade of the week for the newsletter last Friday, and as you can see, 1, 2, 3, 4, 5 the bullish days in a row. We are inside of this wedge, and we go to the upper line of the wedge. The thing that we, I don't want to say predicted, but we were anticipating that when the price was here, right? So we anticipated 220 pips movement. This correction that is starting now is nothing unusual. As you can see, we're bouncing from the upper line of the wedge, right? So what can be the base scenario here? For example, well, my base scenario here is eventually a breakout here. If it will happen after a small bounce like that, or a larger bounce, it doesn't really matter for me. What matters is that I would like to see a very technical setup here, as I'm a technical analyst, so I love technical setups. I would love to see the price breaking the upper line here and advancing higher. Hopefully I will be able to see that soon. British pound to American dollar. Stronger American dollar sends British pound lower as well. We are inside the long-term triangle. It's not the prettiest triangle in the world. Actually, I don't like it. So the situation on this pair for me is not very clear. It does not fulfill my trading strategy, so I won't tell you what's my sentiment on it, because for me this pair is not tradable at the moment. So is American dollar to Canadian dollar, where I still wait for the breakout. As you can see, we had a small reaction on American dollar to Canadian dollar after Janet Yellen, but it wasn't so significant. As long as we stay below this trend line, the sentiment is negative. As long as we stay above the support, the sentiment is positive. So altogether, sentiment is neutral, and I wait for the breakout, either bullish breakout or bearish breakout, which would activate a trading signal for me in my trading system. So let me show you where the party is right now. The party is here. If you're wondering where all the traders are, they are buying here. Okay, so we had an upswing after Janet Yellen from yesterday. The price advanced higher, as you can see here. Everything is great, everything is fantastic. The buying festival goes on. As long as the price stays above this blue line, you can think about joining in, but I would wait a little bit for a correction, right? DAX is also trading higher today. Similar situation to this on, for example, American dollar to Japanese yen, where we had an upswing, we had a correction of shaped like a wedge, and from the wedge we do have a bullish breakout here, and the price advancing higher. So here we do have a continuation of a trend, but here on oil, on Brent oil, we are waiting again for a breakout. So, well, you can see that soon we will get rid out of space here, and eventually they will have to decide they want to go up or down, and that will be a trading opportunity. So far they do not want to decide, which makes trading on oil quite boring, right? So we're just waiting for a breakout, either bullish or bearish. As you can see, the price of the oil is locked around $55 per $55.5 per barrel for a long time, since the beginning of December. We cannot move anywhere. Let's come back to the forex market and let me analyze a few more instruments. Idle show always after switching accounts. I like to do that. What's the situation on British pound to American to euro to British pound? Here also we do not have a significant trading signal. What you may be seeing here is a head and shoulder formation. All right, but the breakout of a neckline is not very clear. Actually, they are defending the horizontal support here. Okay, more like that. Here. Here. I draw those support resistances, but to be honest with you, this situation is not tradable. It's a side trend, boring side trend, and I wouldn't bet my money on the situation. Here, let's check another major, which is Kiwi, New Zealand dollar to American dollar. And there was this resistance here. This can be considered as a false breakout, and now we do have a reaction. This is a trend line. All right, fair enough. On H4 chart, what do we have here is a breakout of this support and then a comeback. Okay, so here is a resistance. Let's check if they respect Fibonacci's. Not so much. If they don't, there is no reason to use Fibonacci's. You can delete that. Okay, you can delete Fibonacci's. No reason to use that. And there is also a local horizontal support here. Okay. Also, not very tradable. Overall sentiment for me is bearish, and I would look more occasions to sell than buy. Maybe sell here. All right. Or after the breakout, sell here. That's New Zealand dollar to American dollar. Also, what I can let's see what's the situation on Australian dollar to New Zealand dollar. As you know, that we will have a data this week that should move those pairs. Australian dollar is much stronger. There is a horizontal resistance here. I think we should get there, but as you can see, the trend is quite strong, so maybe they will like to have a small retracement here. So I also wouldn't enter this. I would not enter this market here. I'm wondering what's happening on euro to Australian dollar. Euro to Australian dollar. Where is it? It's here. Okay, yes, that is a beautiful situation. Look where we are. We are testing supports from March 2015, where we can have a bounce, right? After we broke this horizontal support, which was again anticipated by us, we are still under the trend line. So if we would create potential reversal pattern here, the first resistance is somewhere here. So after the breakout, we can go after the bounce, we can go 350 pips higher. Let's see if we do have a potential retracement here. Well, actually, this is wrong. This is a counter trade, right? I don't like counter trades. I think that it's one of the main reasons why traders are losing money. But I can see where is that coming from, because if you look, like, for example, buying here on important support, and you let yourself to have 70 pips stop loss, and then 350 pips stop loss, so 5 times larger. You can see yourself reach after a few trades like that. Well, that looks promising. Not with a big amount of money. You shouldn't go with full throttle on this position. But if you're a counter trader, and I know that many traders are counter trades, I'm not, so I'm not gonna open that. But if you're a counter trader and you're looking for a decent trading opportunity, which obviously when you counter trade, those trades are less likely to bring you profits. But if you're looking for setup for a counter trade, I think this is one of them. Euro to Australian dollar. Probably, oh, I told you that I'm against that, but obviously I know how the market works, how the retail traders work. I'm fully aware of what you like, what you trade, etc. That I decided to share my opinion with you about this trade, right? Only for counter traders, that's promising. Other than that, you can see that I always try to follow trends. I always try to stick with the trend, like for example on gold, or American dollar to Japanese yen, or Canadian dollar to Japanese yen. But that one was a counter trend trade. Okay guys, remember that trading and investment in financial markets involves an element of risk. Stay safe on the market, use stop loss orders, try to open positions with the best risk to reward ratio, so small risk and a potential high reward. And this way you won't have to be sure, you won't have to be right every single time, but you will leave yourself a space for making mistakes, which is an important thing, because you learn from your mistakes, hopefully. So keep that in mind. And also, if you're looking for decent trading occasions, remember that we post our view on the market on our Twitter account and our website alpari.news. Thanks very much and goodbye.